Saxena and with me Snehisha, and we are taking you through all that's happening in the market, and we are in the middle of the earnings season, and one of the earnings candidate, Raymond Realty, has posted its quarter 2 numbers. We see a 20% revenue growth in quarter 2 on a year-on-year basis, and the EBITDA is also seeing a jump of almost 7% on a year-on-year basis, and we do see the company that is set to launch major projects. But now we are joined by the management, Harmohan Sahni, MD and CEO of Raymond Realty, who is now joining us. Hello, Mr. Sahni. Thank you so much for taking the time out and joining us on ET now. Mr. Sahni, firstly, on the LFL basis, post the demerger, the revenue is up almost 22% on a year-on-year basis, and the PAT is also up 4%. What is the visibility on these metrics for the quarters to come now?
Thank you very much for having me on the show. You are right, our numbers have been quite good compared to the last year's Q2, and H1 numbers are also in line with our expectation. So going forward, Q3, Q4, we are expecting a significant bump up because because of the festive season which is approaching us, and real estate is quite seasonal in that sense. Q3 and Q4 typically are heavy for most players, and so is the case with us. And additionally, we also have planned quite a few launches during this period. So we will have launches of at minimum 2 projects in Thane, and then we've got 2 projects being launched in Q3 itself, and 2 projects are additionally going to be launched in Q4 outside of Thane, which is in the larger amount our region where our JDAs are. So 3 to 4 projects in JDA segment will be launched, and at least 2 projects in Thane will be launched additionally. So that should give us a big bump up. And our guidance to the market at the beginning of the year was that you can expect a minimum 20% growth from us on a year-on-year basis. So basis last year's number, you can expect a minimum 20% growth rate from us on both on the top line and bottom line for the current year as well. So which necessarily predicates that Q3 and Q4 are going to be significantly higher than previous years.
Okay, so Mr. Sahni, that sounds very optimistic. Good afternoon, this is Snehi also joining in the conversation. Just help us understand, because despite steady financials, on the flip side, pre-sales and collections, they've declined on a year-on-year basis. If you could help us understand what factors have led to this dip this time around?
So pre-sale numbers and collection numbers are essentially dependent on which project is currently on during that quarter. So if you see last year, we had a 2 BHK district which is now on the verge of being delivery. We will be delivering it by March of this year, and it's almost finished. So most of the stock in that project is sold off. The collection has been done. And in Q1, we actually didn't have enough stock to sell because we had such a bumper Q4 last year that all our calculations for Q1, we were not quick enough to launch projects, which we are correcting now. So in Q2, we have launched some projects. So since these are all newly launched projects, the takeoff of each project takes that much time. So the long story short, we didn't have enough stock to sell, and the demand is very good. So, and we have a very strong pipeline as far as demand is concerned, but we didn't have enough supply, which is what is being corrected. Partly it has already been corrected in Q2, but in Q3 and Q4, it will be corrected even further.
Right. Mr. Sahni, speaking of new project launches, you launched 2 new residential towers this quarter. They are addressed by GS Season 3 and Invictus Tower B in Thane. How has the market response been so far to these?
Oh, pretty good. Almost 30 to 40% of the stock in both these projects is already sold, and it continues to the market continues to show a significant interest in these projects. And these are just launches. I mean, we've just about started work on these projects. So we've started digging a hole in the ground, and we already have a large amount of inventory which has been sold in this. All this is reflected in greater detail in our investor presentation as well, which we have released after our results. So the response has been pretty good.
That sounds optimistic. Also help us understand for the future going ahead in terms of your pipeline. Other than the projects on the own land and the 3 to 4 JDA projects in Mumbai, are you going to be targeting any other form of development, or is it going to be JDA heavy all the way going ahead?
So we have a JDA-led strategy, which we have stated all along in every quarter. So there is no change in that strategy, but it does not preclude us from pursuing other opportunities if they come our way. We may not be actively looking for buying land or some of the other opportunities which may be there, but if something really nice comes our way, we are happy to look at that. But yeah, to answer your question squarely, we are primarily looking at joint developments because it is a capital light model and it gives us much higher return on capital employed and IRR. And that's the reason why we are pursuing this strategy. It also gives us much faster growth because we can do much more with the same amount of capital. And our focus has always been operationally intensive. So we are not playing on the capital side as far as the industry is concerned. We are more operationally intensive, and focus is really on executing the projects, selling them quickly, and providing a greater value to our customers. And as a byproduct of that, the shareholders will also get greater value.
Right. Mrs. Sahni, also talk to us about the trends that you're seeing in the festive season bookings. Are the inquiries and conversions picking up?
Yeah, so festive season is always good for most of us in the industry. There is a lot of focus. Consumer is in the right frame of mind, and as an industry, also most players, including us, we roll out certain incentives to help consumer make that decision quicker and in a better way. So there is an enhanced value that the consumer will see during the festive season from us for sure. And I'm quite positive that the other players will also contribute to that. So it will be good tidings all round for everyone, the consumer as well as the industry. And the trend so far in the pipeline looks quite strong. So I'm very hopeful and optimistic that this season is going to be very good for the industry.
All right, Mrs. Sahni, thank you so much for taking the time out and joining us and weighing in on the numbers and the growth, the roadmap ahead. We will let you go on that note, but it's time for us to slip into a short break. On the other side, we will be connecting with the management of GPT Infra to discuss their recent